Welcome back. You're watching Prime Property. Kolte Patil is perhaps Pune's most formidable real estate developer. It's also the first real estate company to announce a dividend policy, 15 to 25% of its profit after tax. Now the company has its eyes set on Mumbai and Bangalore. The Group CEO now joins us here on Prime Property to talk more about the company's expansion plans. Thanks, Sujay, for taking your time out and joining us here on the show. Let me begin by asking you, your FY13 guidance for launches was 2.5 million square feet and the top line guidance was 600 crore rupees. It became pretty clear after Q3 that you were going to meet that guidance. But going forward in the new year, what's the launch pipeline looking like?
Yeah, we plan to maintain the run rate pretty much what we have been doing for the last 2 years or so. Hopefully this year Bangalore will also catch up. I mean, for the last financial year we were able to do only one project launch there because of approval delays. But hopefully this financial year we'll have far more contribution from Bangalore coming in. And obviously we are very hopeful of our Mumbai foray fructifying now, because it was mid last financial year that we decided to set up our base here, so that should also fructify this year.
Okay, so you will be in 3 markets, that's Pune, Bangalore and Mumbai, but will the company enter new geographies?
Not for this financial year. We plan to consolidate our presence in these 3 markets, which we feel offer very decent traction. We still have some headroom left for expansion in these markets. Internally, we have set ourselves a benchmark of anywhere between 15 to 20% of the market share before we look at any new geography. So we achieved that benchmark in this financial year in Pune. We are hoping to replicate it in the next 24 months in Bangalore. Obviously, Bombay remains a very large market where we cannot have that. But other than these 3 markets, at least for this financial year, we do not have any plans of going to 4th market. Although we keep on evaluating, opportunities and everything, but for this financial year, these 3 are the focus areas.
Okay, so no plans to enter new markets. But can you explain to me, why is it that you're entering the Mumbai market at a time sales are down, the city's property market is so subdued? Why now?
Yeah, if you look at the contrary viewpoint to what you just mentioned, for a newcomer, any market in such a position always offers the opportunities. We are highly deleveraged as a firm. There is hardly any debt on our balance sheet. We are net surplus cash company, so that offers us good opportunities to write checks. And when a market has undergone structural change like what we have seen in Bombay, where development control rules have changed, some of the policies were cancelled, new policies have taken, so that has resulted in some sort of churn in the market. So these kind of opportunities for a new entrant are available.
So we've discussed the timing of the Mumbai foray, but can you explain me the rationale behind that?
Yeah, I mean, one of the reasons of entering Bombay is margin expansion. So we hope that there will be incrementally better margins than what we see in Pune. So if we are doing about 35% EBITDA as of now in all our Pune, Bangalore projects, we feel it should give us at least 45%, 40 to 45% margins.
So which all regions in Mumbai do you really want to be in?
We have set ourselves a benchmark of about so we are not specific to any location. So we are looking at evaluating deals in places like South Bombay, like Walkeshwar, and really central Bombay like Lower Parel and other locations, Bandra, some of the other eastern and western suburbs of Malad, Mulund, Dombivli, Borivali, and some of the other MMRDA regions also like Panvel we are very positive about. So it really depends. We are not very specific to any particular location. As long as we feel the deal that is getting offered to us throws good value and is promising and it fits in our internal criteria, we are pretty location agnostic.
Okay, so those are the micro markets that interest you, but can you give me an idea at what kind of prices you will, sell apartments in Mumbai?
Yeah, so if it's MMR region, like Thana or Panvel, we would typically look at anywhere from 40 lakhs to 75 lakhs. If the closer you come to the main city, for example, if you're looking at an Andheri, or if you are looking at some of those markets of Chembur and all of that, then we'll typically look at maybe about 1.5 to 4 crore each apartment. If you're looking at some of the closer suburbs of Bandra, those, then we'll be looking at about 8 to 10 crores each. The moment you get onto, the main island, then you will be looking at anywhere from 10 crores to 25 crores each apartment size.
Okay, that's a big range of 50 lakh rupees and 2.5 crore rupees. Now, during the downturn, the company had decided to exit commercial real estate.
Yes.
The exposure was cut down from 50% to 10%. Are you now looking to re-enter commercial real estate?
Not at least for the next 12 months. We are very eagerly watching the space on commercial side. We are, more than the demand, really what we are tracking is the supply, because we, as you rightly said, we had done some analysis internally and figured out that the amount of supply that had committed post downturn was sufficient for absorption over 5 to 7 years. So we feel we are still into the 5th year of absorption, and and our re-entry into the commercial is maybe at least 12 to 18 months away.
Okay, so no immediate plans of re-entering commercial real estate. Now let's talk about your home market, which is of course Pune. How exactly are you reading that market? What are your plans for the city?
Yeah, Pune has been growing very steadily. I mean, for almost 2 decades and more now that we are in existence, and we are very bullish on the market going forward also. We hope to launch about 2.5 to 3 million square feet of new projects across the city of Pune. Obviously new lands are also on the anvil as and when those deals fructify. Last couple of years back we took a completely different decision to cater to the luxury end of the market. So we introduced brand 24K, which is has completely revolutionized the luxury segment in that city, where today we have apartment ticket sizes ranging from 2.5 crores to 8 crores each apartment size. There is plan of extending that brand to Bangalore now, and capitalize on the luxury demand that is there. So as both the cities have been doing very well, and we are very happy that we have grown from a 5% market share to about 16% market share in the city of Pune, and hope that we build and maintain that lead that we have generated.
Sujay, Pune is also now being seen as a luxury market. Developers coming up with, thematic homes, niche products, branded homes like what we are seeing in the case of Trump Towers. Do you have any such plans?
Yeah, I mean, that's where our 24K brand is trying to address and trying to create living experience of global standards really. That's a market that we are looking at aggressively expanding. We are delivering our first 24K project in this particular quarter. We have received phenomenal response. That project is 90% sold out, almost ready now, and the end product there is selling at a 70% premium to the neighboring product. So that's a segment that we're slowly entering into, and we'll move fast on that.
So Sujay, put that in perspective for us. What kind of a price appreciation are you really talking about?
So this project was launched at 3,750. Today, the project is selling for about 7,000 rupees a square feet in 2.5 years' time.
Okay, now let's talk about the third market you'll be operating in, which is of course Bangalore. What exactly are you planning?
Yeah, so we launched one project in October last year in Kannur Road. We received very good response. Actually, we had to stop sales because we follow a construction linked sales model. So sales were running ahead of time, so we had to stop it. We're just restarting it. We've just received approvals for about 1.5 million square feet at Hennur Road, which we hope to launch in the coming months. There's another 24K project in the pipeline on Hosur Road, which will be very good, and will again set a benchmark as far as luxury living in Bangalore goes. And then there are smaller projects on Richmond Road, Koramangala, that we hope to launch.
Okay, now the promoter holding is already less than 75%, so there's no compulsion on the promoters or even the company to dilute any of its stake. But are there any fundraising plans on the anvil?
Yeah, there are no, as you rightly say, there are no plans of raising funding at the corporate level. At the SPV level, we keep on evaluating opportunities if and when we get the right partners. We prefer only an equity model. All our historical private equity deals also have been pure equity. So it's also a definition of the market as to what the players are ready to give us in the market. So to answer that, we are looking at SPV level fundraising, but nothing in the near future that I can see.
Okay, so it's pretty clear that you are looking at private equity for a few projects, but are any of your existing equity investors pressing on you for an exit?
Nothing. I mean, all our business plans are well ahead. I mean, some of our projects have already entered the finishing stage. In some of the projects, our private equity investors have already got the capital back with decent returns. I mean, the other returns are following, so there is no pressure to exit at all.
Okay, Sujay, we'll leave it at that. Appreciate you joining us here at Prime Property and being so candid. That's Kolte Patil for you with its plans for 2013. We are unfortunately totally out of time, so we're going to say goodbye. See you same time next week.